So Trump Media and Technology Group, that's the company behind Truth Social. It lost $328 million in its first quarter. Now, that said, the Trump-owned social media company still retains a stock market value of, give or take $6 billion. Now, only Doug Flynn can explain something like this. Certified financial planner and co-founder at Flynn Zito joins us right now. So, we've talked about meme stocks. We talked about a lot of things like that. Is that what's going on here? Just with a big name attached to it?
In a way, it's almost like meme stocks times 3 if you look at it, because in terms of the volatility of it. But the really crazy part, even so much more than the amount of loss that it had, was the revenue for the quarter was only $770,000. I mean, we've talked about this. There's small businesses that have more revenue than that. And the more concerning part was that revenue amount was less than it was a year ago before they went public. Now, they did put out some good news, like the fact that they have enough working capital because they went public, and they're doing some kind of a TV streaming thing that's coming out. So they're announcing some news along, and I think that gives some people hope.
But think about that for a second. You're right. So there's 4 quarters in a year, right? So you're saying the revenue was what, like 700 grand. So you're saying it's less than $3 million revenue company. And you're right. Some guy, somebody watching, a lot of people watching, I'm sure, own their own business, and they might have far more than that, and just have a few employees. And this thing's valued at $6 billion. Again, give or take, goes up and down in the market every day. But what would you tell people about taking a shot at it as an investor?
So here's the way to look at it. If you look at what we call the beta, that's the risk measure of any stock versus the market, it's over 6 times the volatility of the market. So you have to think like this. If the market, you expect maybe 10% from your market investments, you got to be willing to think you're going to get more than 65% from this before it's worth taking a flyer on it. If you don't think that, it's likely not the risk. Of course, if it does do much more than that, then perhaps it is. But that's the first measure you want to look at, is how much risk am I taking in this? And it's quite a lot, especially when you drill down on the numbers.
The other issue is, how can Donald Trump take advantage of that? There's lockup rules and the like, but that's a separate issue. Next topic, we're moving from Donald Trump to Elon Musk for a second. I know you love this topic on executive pay. You don't think anybody can get paid too much, but some people disagree. Here's the headline from Bloomberg. Tesla shareholder group slamming Elon Musk's $56 billion pay package, saying that 8 shareholders wrote a letter raising all these governance concerns, and they're going to vote again on this payout, $56 billion. But again, like you said, I'm half joking, but you think there's been too much made of this, right? The fact that he, quote unquote, makes too much money?
Well, this goes back to when they issued it versus where it was 5 years later, and so we're kind of rehashing the past. He already drove the company up many times over, so I know they don't like it, but the fact of the matter is he did do that. Now, since that high point, it's come down. That's a separate issue. If you want to give him a different pay package, that's fine. But during this period, there's no doubt he did what he did with the value of that. The big problem here with and why these people are getting together to try to beat this is because they think he's involved with 5 other companies with a premier role, and so how can he pay that much attention? And again, it really doesn't hold as much water when you're saying he didn't pay as much attention the previous 5 years when he drove it up 20-fold. So I get it now. Yeah, but back then we're rehashing that. So the board is trying to kind of put that out there for a vote and see if the shareholders are still into it, and they're going to try again because it was already turned down by the courts.
It was. Well, what do you say, though, about the wider issue? Because I understand that, and I think most people understand that the CEO of a company is going to make far more than an average worker. That makes sense. But the gap, to be fair, it's exponentially larger than it was years ago. Somebody may make a few million, and somebody's making 50 grand, and the CEO's making a few million. But now 56 billion, even if someone's making 400,000 or 500,000 at the company, think about how much more that is than the workers.
Right. So I equate it like this. He didn't take any salary. So in effect, all the workers made a lot more money than him. So what this came down to is, were you able to drive the stock price, which enriched every shareholder? And then if you did that to certain degrees, you would participate. And that's the only participation he got to get to these crazy numbers. Even any CEO, it's some form of compensation, which is many times what a regular worker would be. But then the rest of their compensation, which gets lumped in as they got paid that, they really didn't. It's because they had some kind of positive impact theoretically on the stock price. And if you're a shareholder, That's what you want, and you
Yeah.
participate in that, so
No,
they get a piece of it.
That
And
is
that's
a
what
very
this
good
is.
explanation, actually. It's not like he's getting a $50 billion salary, for example. All right, we have less than a minute until the market closes, so we'll do this one quick. But there used to be so many of these CVS, Walgreens, all these drugstores said they were adding to them like crazy. But now, as you'll see in this headline, real estate downsizing is finally hitting the pharmacies. So the online competition, I mean, I've seen this a lot. They're closing down. What do you make of it?
Yeah, no, Rite Aid's out. CVS and Walgreens have cut back hundreds of stores. There's 3,000 less drugstores than there were just a couple of years ago before the pandemic. They're starting to feel the effects of the fact that competition is really heating up. And so, you know, it took them a little while. They're the last one here, but they're definitely feeling it. And I think there's more pain coming on this.
That's it. Everybody feels that eventually. Amazon takes over everything, rules the world eventually, right? Now, another thing that makes people angry, I guess. All right, Doug, good discussion as always. Doug Flynn on that. Here's the closing number.